stocks near records, and utilities are actually leading stocks higher, and I will explain why I think that is a good thing. And as a result of this utilities leading, I wonder if bonds are about to rally as well. And finally, we'll look at gold, which I think has more correcting to do. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, May 16th, 2025. Please don't forget to hit the like button, subscribe to the channel, share this video, make a comment. I reply to most of the comments, and I read all of them. If you're a subscriber, stay tuned. We'll have a pretty large members-only video, namely market breadths, very important, I think, this week. Will be covered in the members-only video, various ETFs, bonds, foreign ETFs, large cap stocks, as well as some of the speculative securities such as Coursera, Marqueta, and Paramount, as well as some of the gold-related ones such as Barrick Gold. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, for which you can sign up on my site, Master Charts Trading. Let's get started. Yeah, okay, there is the website. So firstly, let's look at S&P 500. So this is the indicators on this chart, this green, blue, red, and yellow lines. You can have them on your chart as well. Just sign up on my site, MasterChartsTrading.com, and you will be able to access them. All right, so first of all, we're looking at S&P 500. We are very close to records. So records are right there. They were set on 19th of February of this year, 2025. And we're super close, basically. So the entire, this drop between February, March into mid-April basically got wiped away with this V-shaped reversal. Literally, it's like looks like a V. And we're next to records yet again, so definitely this drop, I explained why I thought this was a bear trap. I don't know if it was made on purpose by the President Trump or if it was made by accident. But either way, if you sold the security short, this S&P 500 short, then you definitely were wrong. And this drop here was basically, wiped away and like nothing happened. So right now we're approaching records, S&P 500. We are long. You can see this upward facing arrow. This would have been where we entered. In fact, I personally bought QQQ Nasdaq right there on the 8th of May. I already moved my stop to entry, and we are also approaching records, so hopefully we'll make new records pretty soon. And so far things are pretty good. Now if you're a subscriber, stay tuned. I'll be covering market breadth, namely the put to call ratio, and this ratio is potentially warning of trouble ahead. So first of all, let's look at a 4-hour chart of S&P 500, and I will explain why there is potential trouble ahead. So definitely, okay, right now we're looking at 4-hour chart. So 4 hours just means each candlestick is 4 hours worth of activity. I'm using a continuous security, ticker symbol US 500. It's a CFD, or contract for difference, from Capital Com. I like to use continuous securities such as for example, euro versus US dollar or Bitcoin. They're continuous. They're traded non-stop. More or less, S&P 500 futures are traded also non-stop, except for the weekend. and there's a small break between the end of the day and the beginning of the next day, but it's more or less traded non-stop. So looking at this chart on the 4-hour charts, on the 4-hour graph, we can see that there is an unfilled gap here from April 22nd. So it's a gap up, and it's definitely showing buying pressure. So for example, there it is, April 22nd. We gapped up, notice, above this red support resistance line. So this is, showing good presence of lots of buyers. People really wanted to buy. In fact, nobody even bought in this area of the gap because people were just willing to pay higher prices for it. So it's called unfilled gap. So we still have this unfilled gap from April 22nd. We continued higher, more or less non-stop, and then we gapped again on May 12th, and again continued higher non-stop until today. So you can see it on the regular chart. There is that gap between Friday 9th of May and Monday May 12th. So we have two unfilled gaps now. One is from 22nd of April, one is from May 12th. And unfilled gaps are usually like an attractor for the price. People, or rather, for some reason, market participants really like to fill those gaps. In other words, the price will most likely come down. We just don't know when. However, as I will explain in the members only video, I think that is pretty close. That day and time is pretty close. I think we will see a pullback relatively soon based on the market breadth analysis. So yes, definitely lots of buyers, lots of strong pressure to buy. However, unfilled gaps remain. The question is, will we fill them before we hit records, or will we fill them sometime after? And there is no way to tell when or even if this will be filled, or rather it will be filled, we just don't know at what time frame. Maybe it will be filled in 2 years. So for now, again, we were looking at S&P 500 from a point of view of a bull market. However, pullback cannot be excluded, especially since we have those two gaps to fill. One more kind of positive indication of recent activity is the kind of leadership from utilities. So this is XLU utilities ETF, and today we just hit new all-time highs. So let's look at the utilities on the weekly chart. Weekly just means each candlestick is a week's worth of activity, and notice that basically we've been going up without interruptions, more or less, for a while. The latest freakout, which I called President Trump's bear trap, barely affected the utilities. The utilities really didn't even budge that much. I mean, we did come down a little bit, but not like, dramatically. Additionally, on this utilities chart, we can see a potential cup formation. I'm going to draw it out. So high from 25th of November, maybe like that, and now we're seeing a breakout. So usually there are cup and handle, so maybe we'll see a small dip. So this is another reason why I think there could be a pullback, into June. But the fact that we're breaking two new records and the fact that utilities are leading are actually a good thing. So the reason why I think that is a good thing is because utilities require large amounts of money to borrow large amounts of money at relatively low interest rates. So right now the interest rates, which are about to show, are somewhat high. However, perhaps we're about to see lower rates. So this is a 30-year Treasury bond yield. And this is, okay, let me show it to you on a weekly chart. It's a little bit more clear. So the 30-year Treasury now Treasury bond yield is currently approaching 52-week highs, not an all-time high. Obviously, we used to have even higher interest rates at some point. So this number actually means a percent, actual interest rates. Right now, the 30-year Treasury note is 4.9%. These are 52-week highs from January of this year, so we almost touched them today. So we have like 3 attempts to move higher above the previous highs. So far, they have not been successful, so perhaps this is it. Perhaps this is what we're seeing, resistance at around 5% for the 30-year Treasury note yield. Could we break higher? Absolutely, and it would be actually quite negative because, again, this is a potential cup formation, cup and handle even already, so like that maybe. I think if it breaks out, we could see a substantial move higher for the interest rates. Hasn't happened yet. Additionally, like I said, utilities are breaking higher, so perhaps utility investors already sense something that the common folk don't, and the interest rates are actually about to come down. Perhaps the Federal Reserve will surprise everyone and said, okay, finally we're going to lower interest rates, and they should be lowering interest rates. But then again, I can't really, I'm not an economist, I can't tell Jerome Powell what to do. But just from my reading of the charts, I think they should be considering lowering the interest rates. By extension, bonds, so this is Treasury bonds, TLT, they are, they were under significant pressure, and now we're seeing them next to 52-week low. So if, basically bond prices and bond yield move opposite to one another. So we're seeing somewhat similar situation with potential inverted cup and handle, and if we do break the new 52-week lows, like below the January lows, then we could see a significant collapse for Treasury bond prices. Again, I am just not sure that they will let this happen, but you never know. So perhaps they will lower the interest rates and stabilize the bond prices. So we'll see. So for now, utilities breaking to new records, I think it's a good sign for the general market. Even though some may argue that utilities are a defensive sector, and them leading indicates that people are positioning themselves in the defensive sort of environment. But perhaps my interpretation is also valid. So make a comment, say what you think, let me know your thoughts. I do read all the comments and I reply to them. Currently looking at the dollar currency index, since about March of this year, it's been in a downtrend, but potential bottom occurred around mid-April, and now we're seeing a rally towards this red support resistance line. So we're pretty close to that red support resistance line. We almost touched it a few days ago, and we're about 1.5% away. So basically, dollar is rallying against our other currencies, like for example, euro versus US dollar. You can see that euro has been pulling back in favor of US dollar. So dollar stabilized and moved higher. If Jerome Powell decides to lower the interest rates, then dollar most likely will resume the downward trajectory. So it's a balancing act for him, for sure. That's why probably he's like sort of delaying and not really making a decision yet. He just wants to see more which way things will break. So for now, dollar is rallying. As a result of that, gold has been under pressure. Gold has been under pressure. with a potential double top. as I am pointing this out. First top from April 22nd, second top from 7th of May. And additionally, you can see that gold has broken below this low from 1st of May, and we're trading sort of below it right now. So I think for gold, if dollar continues to rally, let's say continues to rally towards the red line, gold will most likely come under pressure and continue lower to at least this blue line. Why? Because XAU divided by USD, gold divided by US dollar. So bottom part of this equation, US dollar, will pull this currency pair lower. Gold has been really on a tear. We traded it. We traded gold miners as well. So notice how we trade. We buy on close above the blue line and then simply hold until we see another close below the blue line. So previous alert was actually from February 2024, over a year ago, and the position still should be open. If or when we close below the blue line, then we'll say, okay, now we have closed this position. So, but then potential double top, especially if the dollar continues to rally, we will see a pullback for gold and gold miners. In fact, gold miners GDX today came down towards the blue line again, and I am very reluctant to buy it right now because I think it doesn't look like gold is done correcting. We'll see again if I'm correct, but I think that we need to see more. We just need to wait a little bit and see what happens. I want to wait and see because the way gold is acting and the way dollar is acting, it doesn't seem complete yet. I think we should see gold. I think we will see gold continue lower to at least around 3,000 or so, 3,040. So that's another 5% down from this level. So let's wait and see what happens, and then act once we have more data. All right, head over to MasterChartsTrading.com, click on sign up for one of the products. Again, I have 2 products and 1 bundle. Hopefully we'll have a 4th product soon. Trading indicators, again, these lines on the chart, this green, blue, red, and yellow line, I use to trade pretty much anything under the sun. It will simplify your life as a trader significantly. They are available for TradingView.com. So this is a TradingView.com interface where I'm hovering. You go to TradingView.com, open an account there, free TradingView account. Come back to my site, to Master Charts Trading, and then once you sign up on my site, I will open the door for you so you can see these lines on your chart on TradingView. I know it sounds convoluted, but that's the only way to do it. And it's actually simpler than it sounds. Newsletter, so again, I send out daily alerts and weekly members only video for my members. This week we'll be covering lots of various ETFs. Market breadth, again, very important if you are trading. That is important information to know because this market breadth sometimes can warn you of a potential correction or a potential rally ahead, and I cover this in the members only video. So again, come over, try it out. 7-day free trial at $33.29 per month, equivalent of a yearly subscription. You can also get a monthly subscription for $39.95 per month, and of course the best deal is to get both indicators and newsletters at a yearly subscription with an equivalent of $599.95 per month. That's it for this week's recap. Again, please don't forget to hit the like button, subscribe to this channel, share this video. Thank you for watching, and have another great trading week. Bye bye.